All right, I think we're live. Welcome to Pro Trader Strategies. We are an educational company, folks. So if you're looking for an edge, it starts with education. So you're in the right place. Hey, hit that subscribe button over there at the side, and you'll notice a little bell down there. Click on that so you get notifications when I pop on. Like yesterday, late in the afternoon, looking at earnings trades, found a few, and I popped on without any announcement. That's how you're going to get it, is through that notification. And throughout this, if you want to comment anything else like Thembeka from South Africa is showing up, hey, throw it in there. Who's the furthest away from Arizona? Thembeka's got the call right now. And finally, smash that like button. It really does help us out. So in this video, we'll talk about the markets, actually how the economic data is impacting that. Today's a big day for that. So let's look at the economic data. We got crude oil inventories here in the United States coming in at a drawdown larger than expected. That means supply going down due to most likely demand here, because we're still seeing our production quotas being pretty high here. So a drawdown of 4.1 million barrels expected to be a drawdown of only 2.6 million barrels. That should give a little bit of buoyancy here to crude oil. We also have the FOMC meeting later on this afternoon. Keep your eyes out for that. That's going to come out at around 2 o'clock Eastern, I believe. And is that right? No, sorry, 1 o'clock. So yeah, right around 2-ish Eastern. And then crude oil inventories, we talked about FOMC statement. We're good. Nothing's going to happen in the FOMC statement, folks. It's really going to be the next couple of days for the conference. They're going to be talking about transitory inflation and everything else. All right, let's get on with the overall markets here. If I remember to share the screen, there we go. Let's get into crude oil. We can see that crude oil is slightly higher, holding on to those 70s. Now, you've heard me talk about this. I think that going down closer to testing that 59 handle or trading 60 is probably more likely at this given point than an 80 trade in crude oil. So I would say risk would be to the downside in crude oil. Bonds are slightly off by about a half a point on the day. We're going to see flight to safety in bonds, and we'll probably get a little bit more insight into what the Fed is predicting for these interest rates. Folks, I think they're going to say that we're going to stay accommodative and we are going to continue asset purchases for the remainder of this year. All right. Equities. Man, what an inside day for the most part here. We just are not going anywhere. We slid a little bit off the economic data possibly, but then the market's kind of just holding tight. Really, the Dow Jones Industrial Average is being led. I went backwards on these. I don't know why, but Dow Jones Industrial Average being led by Boeing, which was a real surprise. And McDonald's as well. We'll talk about those trades that I put on when we get closer to the end here. And we've got the Dow Jones Industrial Average just slightly off on the day. But like I said, Boeing probably adding 30 points of upside to the Dow Jones Industrial Average, despite the fact that it is down on the day. 15,000 in the NASDAQ there. You can see positive moves in equities across the board. Maybe Dow Jones lagging a little bit, but it's all about that rotation we've been talking so much about, folks, is when the NASDAQ is down, it's a rotation into some blue chip stocks and back and forth. And we're going to continue to see this back and forth throughout the remainder of the year. I've said this for the last 3 or 4 months, folks. Now everybody else is jumping on board that this market is going to struggle to make any massive upside moves. Likely downside moves is more imminent than probably the upside moves. How do you see up or downside? Are you talking about with the equities why I'm seeing possible downside in equities, or I don't know where we were at on that there, Gravity, when you said upside or downside? If we're going to go back to, say, for instance, the equities getting a confirmation of a topping pattern yesterday. I'll zoom in on this more in the Dow Jones. You can see this is basically a hangman doji at the top here, and then a confirmation. Now, not a whole lot of follow through today on this, but I think the risk on equities is to the downside for those reasons, and we can see that show up in E-mini S&Ps. Again, another topping pattern confirmation. Not a whole lot of follow through again today, but again, those types of patterns are going to be the thing that I look for a signal of a top. Is that what you're looking for? Really keying in on a a doji like this with the confirmation right behind it. You can see it's kind of happening right along here. Sometimes you get a grouping of them like this, but that's major what I'm looking for. Or what we call here is an engulfing pattern or a dark cloud at the top of a move where you get a big red engulfing pattern around the previous days. So on that type of setup for the equities, that's why I say the risk is to the downside. And we've been talking about throughout earnings gravity, we've seen earnings come out where just like today, and I'm going to talk about them here. So let's just spin off to them. I mean, let's stop talking about the boring markets. We've got Bitcoin moving higher, testing 40,000 again today. I was out of the camp there on that one. I thought we were going to cover this gap before we started really starting to push higher there. All right, so let's talk about some of these trades. With Microsoft, you know, they have Azure, all of these other things that have been doing well with the cloud services, but for some reason, Wall Street doesn't love these high margin aspects of the business. We've talked about it with IBM, all right? We've talked about it with Microsoft. Even we'll talk about it here in a little bit with Alphabet or Google with the cloud services there, all right? So Microsoft, though, I thought the whole aspect of, hey, come out with great earnings, but if you can't give forward guidance, especially with the chips shortages, it's going to be a little bit foggy. Well, again, Microsoft coming out better than expected earnings, forward guidance, all of those great things. Demand for the Xbox is exceeding demand. Demand for the Xbox is exceeding supply going forward. They don't really see that turning around by Christmas necessarily. Well, that's all about the chip shortage. That caused a little bit of downside with Microsoft. And if you guys remember yesterday, I popped on here late in the afternoon unannounced to talk about these trades. So, I went into the July to take advantage of that accelerated theta decay. Remember, theta is not linear. It doesn't happen evenly every single night. Every single night, it actually slightly increases a little bit. So the closer and closer you get to expiration, you can take advantage of that, right? When you sell high, you want to buy low. So with that said, I knew I would be selling high because of the implied volatility spike before an earnings. We know binary events, folks, cause angst in the market because there's the unknown. After that binary event, the known is out there. So there's not a whole lot of volatility left because we pretty much know everything in and around this company, at least at this snapshot in time. So that being said, I want to take advantage of that theta decay volatility. When it increases our premium. So when volatility is at a high level and we know it's coming out because of that binary event. Now, I say it's coming out. It doesn't always, folks, but the probabilities are in your favor, like above 90%. So we pretty much know volatility is going to come out. And if volatility comes out, those premiums come out, added with that massive theta decay. That's what we're looking for in a strategy for an earnings. Just a quick hit. And the July expiring on the 30th, which is Friday, is going to have about as much theta decay as you can ask for there. So I went into the Microsoft, sold the July that expire on Friday, the 300 calls in there for 49 cents. And I did all these smaller than a normal trade because of the fact that I was selling calls in an earnings cycle that has pretty good ones. Are we going to break that whole, you come out with good earnings, but not a good forward guidance, and we're going to sell off on you? Well, that's the mantra I'm sticking with right now. And I was able to buy those Microsoft 300 calls back for 8 cents this morning. So I had to wait on those the longest and was chasing those around as Microsoft started selling off there. I was able to get out of those. And then moving over to Apple, it's another trade, something with Apple. They're starting to make some moves to the upside. But again, Apple coming out with really great earnings, 36% increased revenue growth year over year. One of the things that they saw was the increases in their services sector of the business. Remember, we used to think that they only sold phones. Now less than 50% of their sales or their revenue comes from the sales of phones. The product growth is up 10% year over year, which, you heard me talking about this yesterday. The phones, are people going out there and buying new phones from Apple right away? Well, it seems that they are. 10% revenue growth year over year on the equities there. on the iPhones, which was a much bigger move than I thought was going to happen. Chip shortage, they claimed. So all of those things were some headwinds for it. Again, that chip shortage forward guidance is really the catalyst that's sending these guys down. Maybe these CEOs should not talk about the chip shortage. They do much better. Anyway, in Apple, going into those July that expire on Friday the 30th, I went in and sold the 155 calls in there for 79 cents and was able to buy those back this morning. For 6 cents. So played that to the downside, better than expected earnings. This is exactly what we talked about yesterday. That's what we're seeing throughout this earnings season. And then finally, Starbucks, you heard me talking about wanting to play these folks to the downside because of the drought in South America. That was going to be driving prices of coffee higher, and because they have all of their margins tied up basically in coffee, that could eat into that, right? If the price goes up, they can't really increase the coffee prices enough to offset that difference, because nobody would be going out and buying coffee at that point. So they're going to have to try and muddle through this, which is what they talked about. And one of the things that Starbucks did that got a little bit of a turnaround here is when the CEO went on TV and started talking about, we have such strong buying power and we buy these things so far out in advance. They're buying futures. You've heard of corn futures. So they're buying those futures well in advance of maybe even the crop being planted or the crop even starting to flower. They're buying a crop and they're paying a specific price for those beans. So they've done very well. So that was one of the headwinds they mentioned that I thought was going to be a major headwind, but he kind of brushed over that for folks by saying that they are using the futures market, the softs market, in order to buy and purchase well in advance of these spikes we're seeing. So, when you hear about, corn and stuff like that, well, what people will do, say Kellogg will go out and buy futures on corn because they expect it to go into cornflakes, right? So they're getting that. And if there was a drought, they've already bought those futures at that level. So they've already priced that in. So that was a bit of good news for Starbucks, making a move to the upside. But you can see the original move was to the downside. So we had high volatility. I wanted a bearish assumption based on all these headwinds. I went in and sold calls again. I said yesterday, you're kind of getting a theme here, folks. And it came true to form. But I went into the July that expire on Friday to take advantage of that theta decay. We got this high volatility. I expected it to come out. That happened. As volatility comes out, the premiums come out. So everything worked in all of these. I was, kind of wondering if we got a move to the upside in some of these, that I was kind of hoping for that so that we could have a great example of being directionally wrong and making money on these trades. That didn't quite happen, which I'm happy about as well. So Starbucks played to the downside, selling the July weekly, 132 calls in there for 58 cents. And I bought those Starbucks back for $4 this morning, right after the open. And that's about it for the trades that I've done. I'm going to be looking at a couple of other ones for earnings. I'll pop in maybe later on this afternoon and share those with you if I find something. So make sure you have the notifications bell turned on so that you'll get a heads up when I'm coming on live unannounced. All right. Also, I'll circle back around on here for the questions, things like that. Gravity, I know you threw something out there, but I answered that one. I'll circle back around for everybody else if you have anything that you want me to cover for earnings. Like, say, for instance, you want to look at an earnings for, say, tomorrow, Facebook, all right? Throw it out there. I'll review that and look at it. Facebook's got earnings around the corner. Let me know what you guys want me to cover on earnings. If there's a trade out there, upcoming earnings you want me to look at, come up with a possible scenario, well, we'll look at that. So comment over there. Otherwise, I won't be able to know what you're thinking. And finally, smash that like button if you would. And if you can't take that, take it easy. Bye for now.